We are here to speak about how to minimize losses or how to avoid losses, as we have seen the topic of this meeting. So we're speaking about that on how to minimize losses. And okay, this chart here, it is today our setup. I'm not sure if I shared this one. Let me check. Okay, yeah, it's the one that I shared, Euro GBP. So it is still a rough trade. It is still performing, although it is moving very, very slow. So I shared it when it was here. It went up and it went down, and then it is going up again. So for those who didn't take this one, guys, you can take it now. It's still a good buying opportunity, and now it is more safer because the transition has been confirmed. Because we don't want to take a trade without a transition. Let us see the deal between the buyers and the sellers. So now it's a good trade for those who want to buy this one. You can buy it and hold it overnight, and we are going to see what will happen tomorrow. So you can see that my first target is somewhere around here. Okay, I will elaborate more on it. So let us get to today's topic on simple ways to minimize losses. So to highlight one important thing, guys, it is impossible for us to actually avoid losses at all. It is impossible for us to avoid losses. So losses will always be there. They are part of the game. So we have both wins and we have both losses. So we can't eliminate them because it is very, very impossible for one to predict the market accurately every time. You have to hear that one clear. It is very, very impossible. So when it happens because of luck. If you can analyze and predict the market accurately all the time, it is because of luck. That's the only problem that we have as traders. We think that it is possible for one to achieve 100% win rate. That's the illusion that we have. We think it is possible for one to achieve 100% win rate. It is not possible, guys. It is not possible. So just this is the first thing that we have to keep in your mind. Even the main book that I always recommend, Trading in the Zone, this is the main emphasis, that we cannot know what the market will do every time. That's what you should keep in your mind, that whenever I analyze this trade that it is likely to go up, I analyze it with a mindset that it is also likely that this trade is going to go down. Those are two things that I have, that this trade is also likely to go down as it is likely for it to go up. So that's the thing that is going to help me when I press that buy button. It is going to help me to say, okay, I'm pressing that buy button. I'm going to use that 0.05 lot size or that 0.07 lot size. It will prevent me from using 1.0 lot size. Why? Because I know that it is possible for this trade to go on the opposite direction. That's the trick. Know that it is possible for the trade to go on the opposite direction. That way you are going to become a profitable trader because you have reached the first stage of limiting your losses. Once you have limited your losses, profits will always come. Just as they were coming on your demo account the first day you opened a trade without even knowing how to analyze. Profits were there. So profits will always come and losses will always come, but the point and the trick is to minimize the losses and suppress them as highly as possible, and make sure that it's only the profits that survive. Don't give losses a breathing space. Now, the problem that we have, it is the fact that we traders, we see such a trade, such a scenario where we can say, you see, this trade, it is not possible for this trade to fail. Why? Because the setup is clear. We put that in our mind that, okay, this setup is clear, this setup is obvious, this is a major support level, so it is not likely for this trade to fail. Yet we forget that even major or key levels, they can be defeated at times. Yes, they are defeated in many cases. So that's our problem. We invest in certain trades more than in other trades because we favor some trades more than we favor other trades. We don't treat trades equally. That's our problem. Our issue, it is actually thinking that when I make it in this trade, I will make more money. So let me put a higher lot size. Let me open 500 positions. There is no need for that. Learn to treat the market equally. Learn to treat all trades equally. Don't favor some particular setups and discourage other setups. If you don't favor a setup, don't enter into it at all. And if you're favoring a setup, enter with a mean or a good lot size, which you defined when you calculated your risk. Even if you are trading with a $50 account, you can have a fixed risk. You can have a fixed risk and a fixed lot size. Please, can you teach on analysis and use a replay mode to I will really appreciate. Okay, I will touch on analysis. Actually, I'm going there. So we're going to deal with it even now. We're going to deal with all the steps to consider when you're analyzing and so on. So, okay, I just wanted to highlight that thing before we go into analysis. Make sure that you treat all trades equally. And guys, what I can tell you is that the reason it seems like Forex is not working for you, you can see a lot of people making money, but when it comes to you personally, you can see that it really doesn't help. Okay, someone is not hearing me. Let me just reply to him. Check settings. Oops. So guys, it really works, but when you are looking at you as a trader, it seems like this thing of Forex, it's a lie. It really doesn't pay. Yeah, it pays. What you should know is that there are rules that you should follow. There are steps that you should follow. When it comes to us as mentors or teachers, when we show you things, for an example, yes, I do sometimes show losses, but it is not always where I show losses. It is not always because why? They are discouraging. So I will always, when I make a video, I will show you profit because for you to be motivated, but you don't know that within the trading, there are both the wins and the losses. But sometimes mentors, we capture moments where there were streak of wins and we show it to you, and you then think that it's something which is easy like that. There are losses, but the only thing that makes us survive, it is that we keep losses very small and we keep our wins very big. So that's the game plan. Keep your profits very big and your losses very small, and you will survive. So then let us go to the practical thing, which is analysis. What is it that makes you fail when it comes to analysis? Okay, I will just highlight some few steps that you need to follow. So, but here is a few tricks. When it comes to analyzing a trade, when it comes to analyzing a pair, one thing that I can tell you is that make sure that when you open your chart, you are not looking for a trade. When you open your MetaTrader or your trading view, you are not looking for a trade, but you are looking for a possible trade for the day. Meaning you go there with a mindset which says, I am going to look, please analyze a different pair. Yeah, I'm not analyzing, I'm just teaching for now. This is not analysis. So when you analyze your pairs, you should make sure that you go with a mindset that I'm looking for possible trades that I will take today, not trades that I will take now, because it destroys you. You are not going to be looking for trades that you will take now. So let me make an example. When it comes to this particular trade, I've been watching it since yesterday, when it was flowing down from this level, going all the way down here. Even earlier this day, I've been watching it until I saw a good time, meaning I knew that this is a trade that I wanted to take. That's why here, if you can see here, I highlight trades with the red, meaning these are trades that are close to the setup. These are trades that are close to the setup. So I highlight them so that I will trade them in that particular day, or I will check them as times goes on. There are some times when I open a chart, there is no trade that I can take because I always wait for the right time. Meaning you should always wait for the right time, not just doing what the market tells you at that particular moment. That's why I introduced this issue of trading patterns within a pattern and looking for pattern breaks, because it's more like confirmations. It gives you the idea that, okay, wait for such a setup and let it happen, and then you enter a trade. Let us make an example with this one. Let's say in this particular trade, okay, what can I say? Okay, I wanted to make an example with a sell, but it is not a good setup. Why? Because if you will understand momentum, you will see that there is a shift in terms of strength here. We had a channel, and then all of a sudden we had this upward, which is an aggressive flow, which is no longer a channel, meaning there was a change in the strength of this particular pair. So it is no longer favoring the selling side, because remember, although the price is approaching this resistance, although the price is approaching also this more significant one, we are interested on the question of how does the price approach that line. That's what we are interested, my brother. I check, but still no sound. You will watch the recording, no problem. So it's all about how the price approached this line and how is it approaching this line. So it's not about saying this is a resistance, price should go down, I'm seeing red candles, let me press those sells. No, we are interested on how. There is no need for you to sell, because price here, it entered this zone with high strength, meaning the buyers were dominating the sellers. So there was so much strength, meaning there is no need for you to look for a selling opportunity. So same thing applies in this resistance here. We are going to be looking at the price structure, how it enters or how it reaches this level here. We have to see the buyers getting weak and the sellers getting strong. Now, that's the thing that we get wrong as traders when it comes to understanding power, understanding the strength of those particular players, either the buyers or the sellers. Because what we do, we only put lines. That's what we know as traders. We only know how to draw trend lines, and we say price is going to come here and bounce here, and I'm going to buy it. We forget on how is it going to play reaching this line. How did it play before from this same line? We forget to understand that, and we find ourselves buying here, and only to find that as soon as I buy, price collapse against me, which is something that is common. It is because we just blind ourselves with these illusions that is brought by lines, which divert us from trading with price action, and we go into doing line analysis where we think that price is going to respect lines. Price doesn't respect lines. Price respects psychology. Price respects the mindset of the bigger players. Once you have acquired that mindset of the bigger players, the mindset of investing, there was one thing that I told you one time, that if you are a trader, just take a trade and have the mindset that, let me say I am investing my last maybe $100,000. This is my last $100,000, and if I miss this trade, I will lose everything that I have. Just have that mindset, because that's the mindset of a bigger player. They invest so much money. They don't invest $20 and whatsoever. No, it's a huge investment. That's why they really take time to understand the market structure, and that's why they anticipate the moves. They don't participate, because they understand every aspect that moves the market. So that's the thing that you have to give yourself, that let's say this is my only opportunity that I have. This is the only opportunity I have to trade. will I really take this trade or I will wait for a better setup? You will only find that the answer is I will wait for a better setup. But because you have $100, you have $1,000 in your account, you have $5,000 in your account, you just don't care, you just don't mind. You just take trades believing that it is going to work, hoping that it is going to work. For an example, the main thing that we do as traders, we can see this move here. A lot of immature traders will just press the sell button without asking questions. They will press the sell buttons. Why? They see red candles and they assume that price is still going to go down and go to that line and then go up. Or maybe let me sell and price is going to bounce here and I will close when it bounce here. That's the mindset that we have, and we don't understand that now we are trading against strength. How can you swim up the river? It's going to be a struggle. You are going to survive by luck. So the easy thing, it is to flow downstream. Just follow the flow and it is going to be easy. But us, it's like we are impatient. We are impatient as traders. So I hope we are receiving help. Although this webinar, it sounds like a rebuke, it sounds like correction. There is one thing that I will tell you guys, it is that for you to be profitable at this stage, because all of you who are here, I know that you know trading, you know technical analysis, you know price action, you know fundamental analysis, you have read more than 50 PDFs, you have watched more than 100 videos on YouTube, you watch videos every day. What I can tell you is that you don't need information. You already have information. Even if you can read one book, this Baby Pips thing or any other book, you already have information required for you to trade. But then you have fashioned your mind to think that you need more information. That's why you pay mentors. That's why you pay for courses. Yes, yet you have information. The only difference between you and that particular mentor that is making money, it is simple. It is just following the rules, which is patience and consistency. Just be consistent. Use one strategy. Be consistent on your risk. Be patient, and it is done. You have won. You have won. Patience and consistency. You have won. That's why there is a saying which says, "He who holds his breath the longest survives." Or wins. So once you have understand patience or consistency, using your same strategy, trying to understand that strategy, the most important part of consistent, it is when it comes to your risk. Once you have mastered consistency in this side, even if you have a lame strategy, even if you are using the stochastic only, you have won. You have won, because it's only a game of risk. So what will make you survive in a game of risk? It is actually consistency and risk management. Simple. It's simple. You don't need information. You don't need gurus to mentor you. Me, I will teach you the same thing that you have learned, but I will just put it in a different way. I'll put it in a different way because you have information. But you think that you need knowledge, yet it's not knowledge that is lacking. It's the mindset. It's the psychology. This is the game of mindset. It's a psychology. We're in a marketplace. Understand buyers, understand sellers, and you will survive. Simple as that. You will survive. I can see someone is dancing right there. Is it me alone who is seeing that person? So that was it, guys. Or that is it. That is it. There is him to do right there. He's dancing. I don't know why. Is he dancing or training? So guys, thank you for his training. So thank you for joining this meeting. I really appreciate your presence. I love you all. And can you analyze GBP JPY? Okay, let me open it for you, sir. Let me open it for you. GBP JPY. There we are. There we are, there we are, there we are, there we are. A beautiful chart indeed. We can see what is it that I'm doing? Okay, we are on our higher time frame right now. Remember what I told you, that on our higher time frame we are interested on key levels. We are interested on key levels. Check and see more. More one is Jimmy. Yeah, it's good to exercise, guys, so that we can stay healthy. It's good. It's good to exercise, so I encourage it. Let's do it. Ish, there's this person, he doesn't understand that I'm busy. Okay. Let me just analyze this one and then we go to trade, or we go to sleep. So here what we are interested on, it is key levels. It is key levels. Here the key level that we have, it is this resistance zone here, which price just touched. So we understand that the next level that we have, maybe let me just start it from there. It is that one down there, meaning our support. So we understand that price is currently on our resistance level. So now what we are going to do is that we are going to look at it in a smaller picture, meaning we are going to go further in a lower time frame. Maybe let's look at the 1 hour and see if we can see any significance. So here is a good thing. We have seen prices entered this zone and it was rejected. We can see that we have a high here and a high which is lower than the previous one, meaning here the sellers were pressing in. And another interesting thing, we have this high again which is lower than that one, meaning it's a sequence of lower highs. So if the price is currently on a high, that's where now we should be looking for the selling opportunity, because price is from the significant zone, which is a resistance. But remember, you won't just sell here without looking the bigger picture of this price. That's where we go to our last time frame, because we use 3 time frames, which is the 30 if we are using a 1 hour to trade. So now here is what we have here. Let me just erase, there's something I want to draw. Here is what we have. Remember the principle that we used to enter a trade. We used to enter a trade through pattern break. So we are identifying the opposing pattern, meaning the corrective pattern, because we have an impulsive, a corrective, and a corrective again, and it's a beginning of the impulsive that we are looking for to sell. So we have to spot the corrective pattern. Here we can see that we can draw our line something like this. If you want to see it clear, play around with the time frames. Let me just show you something clear. You can see that in the 15-minute there is a clear flag appearing right there. So we can see that that's our pattern, which is within the bigger pattern. So once we've seen that pattern within the bigger pattern, we wait for the pattern break, which happened here. So when the pattern break happened, that's where we are ready to press that sell button. So now here is a trick. Here is a trick. Make sure that whenever you sell when now the price is going down. For an example, you want to sell here. If you are not if you have time, let me put it like that, if you have time, you can wait for this trade to play out and say let it push up and then form a high somewhere here and then sell. But if you want to sleep, you can put a sell here and put your stop somewhere around there and just allow the price to push up and then go back towards your favor. So when you put your targets, now here is the issue. Remember, when I told you about targets, I told you about strategies, even the Fibonacci expansion. So now here is the theory. When you put your exit, you should always put your exit on a 100% level if you're using the Fibonacci, meaning it has to be times 2 of the corrective, because this corrective, it is like 15%, 50%. So the impulsive has to be times 2, meaning it has to be 100. So your target should be somewhere around here, because price is already close to this low. So you can't put your target here because it won't work when it comes to risk reward. So you can sell this one. It's a good selling trade, guys. But we have the two options: either you sell now or you wait for price to show you signs of bouncing and going down again. Meaning, let's see some sellers coming in. Let's see a red candle coming in, and then you put the sells. Remember, the first thing that I told you: don't favor trades more than other trades. So treat the market equally. If a trade looks more profitable, don't put a bigger lot size. Just put your lot size that you are using in every particular trade. Don't favor a trade more than any other trade. So I analyzed it. It's always an honor to listen to your advices. Yeah, thank you. So yeah, I hope that's it, guys. So we don't have enough time, but I am back. I will continue to put more of the webinar. So I will put another one after tomorrow, but I will let you know. So let us go there and defeat the markets. Let us go there and apply consistency. Let us go there and be disciplined. That's the way through. Discipline, that's the way through. Once you have mastered that, you have won. So thank you guys for joining.